I'm John Steinberg, former president of BuzzFeed and founder of Cheddar, recently bought by Altice USA, the fourth largest cable provider in the country. Cheddar covers the latest in national news, technology, business, and culture across both cable and OTT platforms, broadcasting live 5 days a week from the New York Stock Exchange. The last 10 months have been a wild ride for business leaders, but not all industries are feeling the same pain. New growth industries fueled by technology are taking shape with the shift towards virtual work and online commerce. Many CFOs are making big moves right now to pivot into these growth opportunities and create competitive advantages. In this series, we're going to be looking at these big moves, including the pivots companies are making into digital business models, the use of mergers and acquisitions or divestitures to support that pivot, and the embrace of finance automation to drive productivity. I'm here with Doug Kehring, Executive Vice President and Head of Corporate Operations at Oracle. Doug, give us some background about the company and what you do there.
Sure. So I've been at Oracle for a little over 20 years and actually joined back right before the dot-com crash because I wanted to invest in startups back when that was the hot thing and corporates started doing venture investing. And after I lost several $100 million at Oracle, I switched over and started working in our corporate development group, where I spent about 15 years doing all of our mergers and acquisitions, which total about 140 over the last 15 years or so. But most recently, in the last couple of years, I've taken a broader role with the operational side of things to look at how we transform the business from an on-premise company to a cloud business, and what are all the things that need to change in order to do that across our business processes, our systems, and our people. And that's occupied most of my time the last 4 or 5 years.
Well, Doug, we'll talk about the M&A in a moment, but Oracle has a history overall of making big moves. And can you talk us through some of the big moves that you're most proud of, that you think have been most instrumental in the company's tenure?
You know, we're still led by our founder, CEO, Larry Ellison, and he's got a history of really thinking through and making some dramatically smart moves. And in fact, back early on in my tenure at Oracle, I was here for one of them, which was at the time that we did and announced the PeopleSoft acquisition. No one really had made significant acquisitions of software companies. It was just something you didn't do. In fact, in the years leading up to that, I still remember Larry indicating that the idea that we write code, we don't buy code. And then all of a sudden, of course, the dot-com crashed in the early 2000s, and there were a lot of companies that were sitting around with quite low valuations, and at the same time, our customers were asking for Oracle to offer more of the functionality packaged together at the manufacturing plant. So we thought, what greater time than to start making some acquisitions, and we purchased PeopleSoft and Siebel Systems and several other great companies, put them together, and really created a lot more value for customers by having them from Oracle. So I'd say that as a company, we've really tried to figure out how to see where the puck is going and skate to it in that saying. Another great example was as the cloud started up. Larry Ellison himself was one of the early investors in some of the first cloud companies ever, including NetSuite and Salesforce.com. So he saw where the technology was headed, and he had Oracle begin making those investments as well in the Fusion application suite. And in fact, today we're ranked the #1 Fusion ERP system in the world, mainly because of the foresight to make those investments over a decade ago. And since then, we've been maturing that product and building up many customer references to the point that most customers realize that if they want a modern application suite that's built around cloud technologies, where they can get access to quarterly innovation and new functionality, there is no one better than Oracle.
So let's stick with M&A. 150 acquisitions since 2005 with a market value of $80 billion. What has been the key to that M&A strategy, and what do you look for in a software company to make a big shift, to make a big move when you do an acquisition?
Having done that many transactions, I think it boils down to 4 simple criteria. They're really easy, but it took us a long time to figure out how to do them well. The first criteria is to pick the right targets. Each acquisition has got to be strategic to your business. It doesn't make sense to be a collection of assets that don't fit together, because you can't create value by having acquired them. You can't get unusual synergies in which you can return the value to your shareholders and to your customers. So at Oracle, we've always prided ourselves on ensuring that we actually find the right companies that fit the best with our business. And when that's not the case, we don't make the acquisition. In fact, we walk away. I think that's held us in good grace, mainly because if you look at us as a company from a divestiture standpoint, we've made no significant divestitures to date, which means everything that we've put together under one roof has been strategic. I think the second criteria is to pay the right prices. It's really easy to use your checkbook and write a runaway value for a company because you think it's strategic. And maybe it is strategic, but at the end of the day, you still have to make a return for your shareholders, because you can get away with doing that once or twice, but you're not going to get away with doing that for very long. So Oracle was extremely strategic early on in the cycle of making software acquisitions, where we bought very marquee assets at 2, 3, 4 times revenue. Today, companies are trading at 30 to 40 times revenue. So Oracle's been very disciplined about looking at acquisitions and ensuring that when we find a strategic asset, that we only proceed when we can find the right price, in which case we can generate a shareholder return so that we can be around for our customers for the long haul. I think the third criteria is to integrate effectively. So be the best integrator possible, which means that you've got to think about how you bring these assets into your fold. So that the companies that don't do any integration, the ones that leave their acquired assets on a standalone basis, it's very hard to generate synergies, which means, again, it's very hard to get a good return from those assets. But even more importantly, the employees and the customers don't see it as an integrated company. They don't get a lot of value from standalone assets. At Oracle, we try to use our systems and integrate the companies very, very quickly, so that when we're done after 3 or 6 months of the integration process, there's but one company again. We have one HR group, we have one IT organization, we have one finance group, and so everybody's under the same system and rowing together toward to help customers be more effective. And I think the fourth criteria for success is to repeat. And by that I mean you really have to be in the acquisition business or not. It doesn't make any sense for you to do one acquisition every now and then, because you won't build up the knowledge base and the experience in order to make the next acquisition even more effective. So at Oracle, over my time frame, we've averaged about 10 to 12 acquisitions a year, which means that we can dedicate resources across every function to helping integrate these acquisitions quickly and effectively. And they learn each time that after every deal, we can sit back and look at the transaction and understand, what did we do right? What did we do wrong? And in the cases of where we might have done something wrong, we figure out how to do it more effectively or better the next time around. And that means that we can outcompete for these assets compared to our peers, because we know how to do this so well.
Over the summer of 2020, Oracle worked with McKinsey and the AICPA on a content series highlighting how finance teams can best respond to the challenges of COVID. One of the key takeaways was that companies need to be thinking about business model innovation. Now, that's a bit surprising to me, Doug, because I would think during COVID they would be thinking about kind of crisis management. Talk to me about how business model innovation came out of that study.
Obviously, people have been a lot more receptive to change as a result of the pandemic. Many of us have never worked from home, and all of a sudden we were caught in a situation that wasn't business as usual. And over the first few, I'd say the first few weeks or the first month or two of this work from home environment, I think people got up to speed really quickly, and we started realizing that you actually could be more productive than ever from an efficiency standpoint, and that resulted in not only sort of not worrying about, is there downside here to this new environment, but what's the upside? And I think the upside has been that there's a real opportunity to take a look at your business and try to figure out how to accelerate the pace of change. That we've all been down this idea that digital transformation is front and center of the future, and we've been advocating for this for a long time, is to move to more of a digital business, to do more things online and to create an environment in which you leverage technology to help drive your business. And we're actually all realizing that this digitization of our business is creating a lot of efficiencies. So what it's resulting in is an acceleration of this. So now people are like, oh my gosh, let me look at other ways that I can accelerate these moves. So whether it's the cruise industry, technology industry, retail, et cetera, it's a great opportunity during this pandemic to make some of these changes.
I want to ask you about the scale of these changes. I was reading a white paper that Oracle put out about big moves, and it said to look for big moves that are not 10% increases to the top or bottom line, but are rather 30, 40, 50% changes to a business unit on either the top line or the bottom line. How would a company the size of Oracle, would you advise either your peers or your partner companies to think in terms of scale that big when thinking about business model innovation?
My experience so far in the last 5 years is one in which you have to be sure as a company that you have someone thinking about those things. So left to their own, what I do find is that most businesses just go about their day-to-day processes. So incremental change is all they have the stomach for, and because it's all they're looking for. So the idea being is, I did what I did yesterday, and today I'm going to wake up and do the same thing. So I might grow 5 or 10% faster if I do a better job at this, but it's not going to transform because I'm not thinking about that. And one of the things that we talk to our customers about, and certainly we follow here at Oracle, is how to transform at an even speedier pace. How do you really disrupt your business? And I have a whole team that looks across the company, and we're constantly evaluating where are we inefficient, where based on customer feedback could we do things dramatically differently, where are we missing product opportunities to fit gaps, et cetera. And then we rally the teams to not only build a strategy and a business model for that, but then create the systems that need to be implemented in order to effectively drive it, and then just go out in project management through the process. And these things added together result in that opportunity where you can look at things and find huge opportunity for revenue growth that might be there. Now, that being said, all of these things take time. So you might have a great growth vehicle and you're suffering from other areas in which your businesses aren't growing as fast. But in every case, whether you're a high growth, mid growth, or low growth, you can shift the model in a material way if you're constantly looking at that transformation exercise.
And back to the pandemic, when you overlay the pandemic with that transformation exercise, has it allowed you to speed things up? Has it grinded certain things to a halt? How has overlaying the environment impacted that kind of transformation you were just talking about?
The big thing is that there's been a change in the cultures of internally at Oracle and the cultures of our customers in terms of their willingness to look at different things, right? I mean, you go from the standpoint of having lived for 30, 40, 50 years, and nothing was really different. You got up, you went to the ball game on the weekends, you played your golf, et cetera. We really, as a society, never had a disruption of the level that we've seen. Then all of a sudden you're told, stay at home, right? Don't go outside, don't go to the supermarket, et cetera, et cetera. And all of a sudden people are like, we got to be flexible here. We got to start thinking differently, and that's allowed people to kind of change their thought process and be much more open to doing things differently. All the way down to just the most simple things like my core financials, for instance. You would think during a pandemic, again, that would be do I really want to do something like that when my employees aren't in the office, et cetera. The reality is it's the perfect time, because that's the time in which you have the opportunity to look at things differently. You can sit down and revisit your business processes and really not only implement a new system, but implement a new way of doing business that will benefit you for the next 20 or 30 years.
How much did being in the cloud already and having all those financial systems in the cloud already make that possible? And how much more difficult do you think it would have been if you were not a cloud-based organization?
Cloud is the great enabler, right? Because when we look back in the previous 40 years as an on-premise business, where you took your upgrades to your core systems every 4 or 5 years, if you're lucky. Sometimes it was oftentimes longer than that. That meant that between those upgrade processes, you had absolutely no innovation in your systems because it was frozen during that time frame. So Now with the cloud, you're getting these updates every 30 days. So every 30 days, you have an opportunity to evaluate new technology, new capabilities, and essentially the flywheel becomes much, much faster in being able to transform your business. So when I look at some of the internal things that we've done, like the accelerated buying experience, which was one of our first undertakings to transform how Oracle does business with our customers, with the idea being we've just got to be easier to do business with in this new service-based world. That we don't want contracting to last for months on end. We want you to be able to choose the product you want from Oracle, get it agreed to very quickly, and so empowering our field, giving them the system and tools in order to do that without a lot of delay was one of our imperatives. But we didn't know what the architecture should look like for that business model immediately. It changed over the course of a few months. And so the cloud enabled us to go back and grab new functionality and continue to improve that process as we went at a pace that, again, would never have been available to us if we were using on-premise licensed software.
You led that project for Oracle, correct?
Yes, I mean it was a very large team effort, but one of the big things we have is a transformation office that helps program manage these disruptive activities.
So how would you take what you learned in doing it for yourself and apply it to a multinational Fortune 100 business? A move to the cloud for one that maybe is completely still on-premise?
The tracks have been laid. People have come before this, whatever business that we would be talking about. So, obviously there are early movers to the cloud, and there are later movers on that front. But when a company of Oracle scale has been able to fully move their applications to the cloud, and we're a complex business that operates in almost every country in the world, that has dozens of languages that we operate in, with lots of different payroll systems throughout the world, that has software and hardware and multiple product lines, as well as a hardware supply chain, et cetera. I mean, no matter what it is, we sort of face it as a company, and yet the cloud has been this enabler for us. So we see across every one of our industries in terms of our customer base that there's none of them that can't take advantage of the cloud. But you have to be willing to make an investment in that, and you have to be ready for that change. There are believers in terms of how to disrupt their businesses because they see how they're being attacked around them, and there are others that might be more hesitant to do so. In which case, the safest choice is to do nothing. The trouble is the do nothing approach, only lasts for so long, and ultimately, has a more likely tendency to make your business irrelevant, as opposed to one in which you're a innovation leader.
Doug, what are the unique opportunities Oracle sees where you're accelerating your investment?
I think Oracle sits at a very unique place in the technology arena, and that's because we are the only cloud provider that is offering both the applications as well as the infrastructure capabilities. And why is that unique? It's unique because, first off, in the applications arena, we've got an end-to-end set of capabilities, so it will ensure that even the most complex company can run their business in a very digital way. And all of those capabilities, including our Fusion cloud services, all run on our infrastructure, Oracle Cloud Infrastructure, OCI. And OCI has been built with autonomous right in all of our capabilities. So the concept being is that whether it's our applications or your applications, we can run on a common infrastructure that is best in class, is most innovative in terms of its capabilities, but are also deeply embedding autonomous features in it that will allow the infrastructure to maintain and run itself without human intervention. So, across all these capabilities, I think any business in any industry, in any part of the world, can find Oracle as a great partner in which all they need to do is give us their most difficult, most challenging problem. And between these applications and infrastructure cloud capabilities, we can help bring value that will automate their business, accelerate it to a digital world, and enable them to gain much more value than if they did nothing or worked with another vendor. And ultimately, if an Oracle customer walks away and goes, gee, Oracle's aligned to what I'm trying to achieve, and their success is built around my success, And as a result, when I succeed, I'm going to tell the world all about it because I think this is a great thing. Then we've hit the home run, and we're at escape velocity from a business standpoint.
That does sound like the home run. And we'll have to leave it there. Doug Kehring, thank you so much for joining us today, and see you again soon.
Appreciate it. Thank you for your time.